During the second quarter of this year, we've seen some profit-taking hitting European shares, and European smaller companies have generally traded down a little bit from the levels that they reached at the end of the first quarter. The primary cause for this has been worries about the Greek involvement in the Eurozone and how long that can continue, but maybe this has really been an excuse for profit-taking, and this has hurt smaller companies to some extent, and larger companies indeed actually fell back more during the quarter. The portfolio is structured primarily to capture the opportunities that we see at the stock level. In other words, we look at companies first. That's the main driver of our portfolio construction. We're looking for companies where we think that good management teams will use strong balance sheets to drive earnings surprises and upgrades to their forecasts for the coming year through their own efforts. And so that's really how we structure the portfolio. The result is that we have a large percentage of the fund invested in Italy and France, perhaps more than we have done in the past. But that's because we're finding good opportunities there, not because we particularly believe in the French or Italian economies per se. Well, over the last few years, despite the travails that Europe has been going through, actually European smaller companies have generally seen share price increases. In fact, more than the profits have been going up over the last few years. And what that means is that valuations have become more extended compared to their historical averages. Now, the balancing item for that is that we are beginning to see economic recovery in Europe. And when we see economic recovery, so we should see profits start to accelerate. And so we're at an interesting situation for the market as a whole in Europe, for European share prices across the board, whether they're large caps or small caps. We're at a situation where we do need to see profit upgrades and further evidence of improving profitability coming through to justify the valuation levels and the market levels we're trading at the moment. If we see those, and we are reasonably confident that we will see upgrades, at least from the stocks that we own in our fund, then we should have grounds for further gains to be made by share prices. Of course, if we don't see that, then this may be a little bit more of a challenge for European smaller companies. But on balance, we remain cautiously optimistic.